I will explain from the starting. Okay. So let's come to the 1-month time frame. If you look at gold in 1 month, you will notice one thing about gold. In the journey from 2022 to 2023, from 2050 to 2070, the market went from there 3 times and got a rejection 3 times. And you will notice one thing, that as per VSA, volume spread analysis, if we trade, you will see spikes in all 3. It's not like any of the 3 candles are properly closed like green and red candles. It's not like that. What does this mean? The market is not interested in going to buy. Big players or hedge funds are not interested in simply bullishing the market. Okay. So this is the first sign for us that the market is not bullish. So if anyone is thinking that the market has broken the all-time high and made a new high, then the market will go to 2,200. That's not how it works. We have to follow the sentiment of the market. The second thing you will see is that the market started bullish. It started from 700. Before that, if we come to the starting market was actually $250. Still the market went bullish. It took a minimized pullback. And the market went to 1950 or 1920. Then the market took a selling from 1950 to $1,000. After that, the market was still buy side. But now the market is a little sideways. Okay, sir. Now let's come to the week time frame. Now we will see the market at the Fibonacci level. What is the function of Fibonacci? Take any market, be it the commodity sector, currency sector, crypto sector, or index sector. The way the market is going, it declares its side. If we take it from here to here, if we take it from here to here and take it high from the top. If any beginner trader sets a tool in Fibonacci, he gets a lot of zones like 23%, 38%, 0.5%, 0.6%, 100%. It starts from 0. Now how do we apply this? The simple way to apply it is that there are 2 important zones. For gold, the important zone is 70% and 0.5%, which we also call 50%, and 0.61 is because it is the golden ratio. If you search for golden ratio on Google, 0.618 will be written there. So we have applied 2 levels from here. Now we have deleted our Fibonacci. So we have 2 levels here. The first is 1845, the second is 1792. So these 2 important zones are for us. Now the market has come down with a pullback. So the first zone is at a week time frame, 1845, and the second is 1790. So the market can come to these 2 zones and can break it. Now I will tell you the first possibility. If the market wants to buy to take a pullback from here, then it will first test 0.5%, which comes at 1845 zone. In case the weak candle closes below this, if the weak candle is something like this, and it closes like this, then it will try to buy the 0.61 golden ratio. If the market takes support from here, then the market will simply come in a high-low pattern and will buy. And again, the important resistance that it has been testing for the last 3 years will come at that. Now there are two possibilities here. It can sell again or it can break out and buy at a retest. So this is the analysis of gold at a week time. Now we will come to the day. Now we will come to the day. Now we will simply put our Fibonacci again on the day. On the day, our Fibonacci will be of the last market retest. The market did a retest and broke its 1800 zone. So we will test it at an all-time high from our 1810 zone. So we have two zones, 0.5 and 0.61. The first 0.5 zone is 1942 and the second is 1910. Now we will pay attention to one thing. I will tell you why Fibonacci is important. Now our zone was 0.5%, which if you look at it on day 1, the market was consolidated from the last 1 month and it tried to break it for a long time. It gave a spike and it hunted liquidity, but again and again it could not break it. But after doing everything, it finally broke it. What was the reason for breaking it? The reason was that the chairman of Fed, Powell, had a press conference where he said that we can do a 2-time rate of interest and hike this year and there is no hope of a pause. You can see a pause at the end of this month, in November or December. So when this speech came to the market started falling. And the falling continued till 1910. And after that, there was a buy in Friday. The market was bullish in Friday because the chairman of Fed gave another speech. In that he said that we will not do a rate cut and maybe we should not do a rate hike. One chairman is saying that we will do a rate hike and the other is saying that we will not do a rate hike. So what is this? The market is being manipulated as a buyer-seller. Now you will notice one thing, the level of Fibonacci that we had calculated on the daytime frame, the market has taken support from there. That is why it is very important to get a level from Fibonacci. Now you see, sir, you come to H1, you will see the same support on H1. You come to H4, you will get the same support on H4. That is why Fibonacci is important. Fibonacci's role is important because of this. So all of you should use Fibonacci. Now we are talking about gold. What can be the next move of gold? The next move of gold is the best. Until the day 1 candle does not break out below 1910, until then you keep the SL below it and buy. This is the best option for beginner traders. You can make a chart like this. If you want, you can take a screenshot of this chart. And you can simply buy like this. Whenever the market is at 1910, you can buy. You can keep buying. Like you did between 1945 and 30, keep doing the same. In case if the day candle breaks, like this. If the candle closes like this, the next support will be of 1970. If it breaks, the next support will be of 1870. Why will it happen? I will tell you. Because in the peak time frame, the biggest volume in the market came here. The big volume means that the big players entered here. So they made such a big gap in the market. Sir, I want to tell you one important thing. If you see a gap in any pair, it is possible that the gap will not be filled. But there will be a time when the market will go to fill it. You see, this gap has not been filled yet. You see, the circle is so long that the market is coming there. Maybe it is possible that the gap is filled and it becomes bullish. But we have a support of 1910 at the Fibonacci level. We will play 1910 until the market breaks out. So it is best to analyze. It's very simple. There is no confusion. You can simply analyze any market. Okay, sir. We come to a short time frame. Let's see on H1, sir. Because it is for intraday setups. If you look at intraday setups, the market is still going to sell in the internal structure, making lower high, lower low, lower high. And again, I will tell you that. But we still have a support of 1910 at the Fibonacci level. So I personally will take a trade from 1910. And I will tell you all to trade again and again.